This is the concluding lecture for this course on buying call options and buying put options. We saw how we can enter a call option or a put option trade. What are the things that we have to look for? Obviously, your outlook for the trade is very important. Then the other thing is important is how long is this outlook? So do you think the stock will make this kind of a move in 1 month or 3 months or 6 months? Because that really determines which option expiry series you should be choosing. And in general, whenever you're going a long option, whether it's a call option or a put option, you want to give yourself enough time. And that's because in the last 30 to 60 days, time decay becomes exponential. And whenever you're long options, you have to watch out for time decay. So in general, if you wanted some kind of a yardstick, if you're going long an option, I would say that you should give yourself at least 60 days. So anywhere between 60 and 90 days is a good time frame for a long option. Now, you don't want to go too far either because you're exposed to two things. One is the price of the option that you're going to pay is going to be more. And the second is you're going to be long on Vega. So the more further out in time you go, your exposure to volatility is going to increase. So you're going to be a Vega positive trade. So in general, whenever you put on a long option, whether it's a call or a put, you want to watch out for that Vega exposure and make sure that Vega exposure is something that's acceptable to you. And in general, stocks should be at the lower end of their volatility curve when you put on long options. Then we went right into trading. We took a trade on Chipotle Mexican Grill. It worked out very well because the trade entry was phenomenal. And there was some market pressures coming in, so we perhaps took it off a little early, but it's always better to be safe than to be sorry. And then on the long put trade on the Euro ETF FXE, this was a beauty of a trade. We put the trade perfectly. We timed it based on technical analysis, on the chart analysis, and we timed it perfectly. And the FXE ETF came down by almost 5 or 6 points. And that's a big move for a currency ETF because currencies don't trade in that kind of a range. So that was good. And we also had some sophisticated order management techniques there. And hopefully you've learned how to use conditional orders. And there are other types of orders as well. But the important thing is you have to protect your profits when you have it. And then we had a few case studies by looking at various stocks and various charts. What would be the ideal trade? Because now we've covered the 4 single options. You have 2 bullish strategies, you have 2 bearish strategies. The first challenge is to develop a trade outlook for your trade. And that's really the challenging part because you have to analyze whether it's time to go for a bullish trade, it's time to go for a bearish trade, or is it time to go for a neutral trade? And you learn in later courses that you actually have strategies for neutral trades. And then, of course, we looked at various stocks like LinkedIn and Caterpillar, and we had these case studies to determine what kind of a trade we would get in. And then finally, we looked at adjustments for single options. Now, you heard me talk about the 3 legs of the stool, and adjustments is the 3rd leg. So adjustments is an art, and you have to learn the art of adjustments because nobody can be perfect in picking the direction of a stock. And so most of the time you might be right, but you're going to be wrong at least 30-40% of the time, if not more. So you have to learn how to adjust your positions, and adjustments are just a part of options trading. So here we learned the technique of how to adjust single options. In the next course, we are going to be dealing with option spreads. Now this is really where you're coming to the heart of options trading. In the next course, we're going to be dealing with option spreads. There are 4 spreads, just like 4 single options. And in fact, each one of those spreads are an extension of each one of these single option trades. And so once you know how to manage a single option trade, then it'll be easier for you to understand how to manage option spreads. So I look forward to seeing you there. I hope you enjoyed this course. If you have any questions at any time, please send me an email at info@optiontiger.com, and I look forward to seeing you on the course on option spreads. Thank you.